Hello friends, welcome to my YouTube channel Simply Stocks, and today I'm going to talk about Nestle, a top stock, but how are the valuations and why it is falling. So let's understand about it. Let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position to any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about Nestle, here's a small request that kindly support me on Patreon. Once you do that, it will help me grow the channel, help you also ask me questions and eke out answers in greater detail. Once you get a $10 membership, you'll have access to my portfolio, my watch list, a number of podcasts I put on from time to time. And also you can ask me any number of questions on Patreon with respect to the markets or your stocks. Also, if you cannot pay on Patreon, you can you can email me, and we can have other means of payment as well. For detailed market or company talk or a portfolio you are having, then you can email me as well for that, and we can work things out with a fee. And once you take the membership, even on YouTube, you get all the benefits of Patreon there as well. In terms of the company, it was formally established in 1959 and started operations in India in 1912 as Nestle Anglo-Swiss Condensed Milk Company Export Limited. So it has been in India for 110 years. And its first factory as Nestle India was in Moga, Punjab in 1961. A very renowned brand, a top brand in the milk food segment, and especially in the baby food segment, and manufactures top quality chocolates and milk products, and is the biggest brand in this space, especially in the baby food segment. So has been a market leader for many years. In terms of the financial performance, these are Q4 numbers, the March quarter numbers. So sales went up by 11%, but profit dipped by about a percent, and inflationary pressures were being seen here, and margin contraction was taking place. Although operating profit margin came out to be 113%, it dipped by around 300-400 basis points. There's high institutional and promoter holding, but only 13% free float is in there, and the basic point is why it trades at around 100 times, 70-80 times is because of its margins. But now margins should contract, so from 100 times, 110 times earnings, it has gone to around 70-75 times. So why the euphoria about the stock, or why the stock has done so well over the last 4 or 5 years? It has tripled over this period, and many people would not have realized since the 2016 crisis. So 6 years, it has gone up 3x from around 5,000 levels or so, 5,500 levels. It's the moat and leadership. It has leadership in noodles. It has leadership in you can say baby food segment, milk products, chocolates. So it has been doing extremely well for many years, 20-30 years at least, as far as I remember. Exceptional return ratios, as I have just explained, in terms of margins, top management. There's a longevity of business. This business is not going to end. Yes, there could be some you can say recessionary pressures for the company, and the company may not do well for 1 year, maybe four to 6 quarters, but then it comes back with a vengeance. And if the stock is down over that 4 to 6 quarter period, then the stock may double from those levels in a very quick time. That is how the, you can say, the cult of this company has been developed. And so everybody will be willing to buy big time once the numbers get better, or the inflationary pressure looks like cooling down, which could happen in the next 2 quarters or so. So quality always sells at a premium, and today it is trading at around 75 times current earnings, 70 times forward earnings. It's very attractive at the moment. So in terms of valuation, currently it is trading at 70 times FY23 earnings. A bear case PE was around 52 times in 2016 when the Maggie crisis hit them. I cannot say that it could go that way, and that is why I'm saying that it was trading at around 100 times, 110 times earnings. From there, we are now at 70 times, very attractively priced at the moment, from around 20 20,000, 21,000, it has gone to 16,000, 16,400 levels. Correction has taken place. Normally in these types of top-notch companies, corrections are between 20 to 30%. It is already down some 4,500 rupees. Around 20 to 23% has been shaved off. Maybe another 5-6% is left, which could happen, which means another 1,000 rupees. I'm saying 5%. If you take 20,000 as the base value of the stock, so that's 1,000 rupees. So I think 15,500, 15,600 is the worst case scenario on the stock, trading at very attractive levels. And as I've analyzed, I think 5% from these levels would be a great buying opportunity around 16,000 or so. I don't see the stock breaking 15,000 that easily. Maybe pressure will continue for at least 2 quarters more, but this is all an opportunity to buy into such companies. Inflation will make sure that the stock may not rise a lot in the next 6 months, 4 or 5 months, but over the next 5 months, if you can accumulate some money and invest into it, it would be a magnificent investment from a 5-6 year point of view. In terms of stock technicals, there's strong support between the 16,000 and 17,000 region, and that is exactly where the stock is trading at. So closer to 16,000 would be a big buying opportunity. It has ran up 3x from the 2016 lows. You have to understand that till October it was at around 20,800 or so. So there had to be a correction. There has been a correction of 7-8 months. There could be a correction for another 2-3 months, but the support is around 16,000. The major breakout is expected above 18,500. I don't see the stock doing that well unless it takes out 18,500. So what you can do is you can buy some here and buy more at 15,700, 800 if it goes there, and then probably put in all the money around 15,500. I think the maximum fall from these levels could be close to 1,000 rupees. There has been a big negative sentiment, especially on the food consumption businesses across the board. You look at a DMart, you look at Nestle, you look at any other company that sells packaged foods on their retail stores, or that sells packaged foods that they produce, because of the higher inflationary costs that they are facing. But these are times where you can buy into such marquee brands. You have always thought about buying into them but never got the opportunity. This is the opportunity. It is not headed towards 12,000, 10,000 unless the market completely collapses. So you have to understand that a stock could go down to a certain level and then it just stops going down and then moves up later on, even in bad news. So in my opinion, those levels are around 15,500 in the worst case scenario, in the case of Nestle. So what needs to be done? Buy close to 16,000 or some at current market price, as I just explained. It's a generational stock. Don't buy just for trade. Buy for at least 5-6 years. Then you'll make big amount of money here from these levels, because the stock has already corrected, and it is very hard to trade such stocks. You have to understand that. So this was my video on Nestle. Please like and subscribe my channel and hit the bell icon so you can get my videos straight away when I post it. Kindly support me on Patreon. Thanks a lot for watching.